Michael Burry has been one of the most talked about investors, and it's fair enough too. The guy is certainly not afraid to share his thoughts and opinions on the state of the economy on his Twitter page, interestingly titled Cassandra, a Trojan priestess that uttered only true prophecies but was never believed. Anyway, it's fair to say the news out of Michael Burry's mouth recently hasn't really had the most optimistic sentiment you've ever heard. Over the past few months, he's repeatedly hinted at a monster stock market crash and believes we're really not even in the thick of it yet. But what's even more interesting than his tweets is the fact that Michael Burry, being an investor with over 100 million in assets under management, has to file a 13F filing every quarter revealing what he's been doing with his own portfolio. And as you might have already seen, his most recent 13F, filed a few weeks ago, has definitely caught the eye of the investing world. So in this video, let's talk about exactly what Michael Burry has been saying on Twitter over the past 2 weeks, and then let's look into his 13F filing to see what we can take from it. So we all know the story up to this point. Michael Burry, the perma bear, tweeting about how he was right about inflation, how the market was destined to fall off a cliff thanks to the Fed's mismanagement, and how it's going to get a lot worse than anyone was ever expecting. But over the past few months, the market is up by quite a bit. At the time of recording, the S&P 500 is up around 17% from its low in June. For a lot of doomsday prognosticators, this would normally cause them to go back into hibernation, but we're seeing none of that from Burry. In fact, he is doubling down on his prediction that the stock market is going to get a hell of a lot worse, repeatedly calling the current market performance a short-term bear market rally. Have a look at this. On the 22nd of July, he noted the similarity in bounces during the tech bubble crash and right now. On the 11th of August, he tweeted, "A NASDAQ bull market? Because it's up 20% off its low? Who makes this stuff up?" After 2000, the NASDAQ did that 7 times as it fell 78% to its 2002 low. And he added to that argument on the 15th of August saying, quote, "The S&P 500 completed a 22% 2-month rally and the NASDAQ a 43% rally. The S&P would fall another 42% and the NASDAQ another 48% by the bottom post-WorldCom in late 2002. And also, have a look at the news clipping he attached to that tweet. This is back on the 22nd of May 2001, about a third of the way to the bottom of that crash. "They feel the bottom is in place," said Brian G. Belsky.
Yes. What's going on, man? Let's pause this for a second. That's 5 months ago, man. So just the other day, Michael Burry, big short investor, issues an ominous warning after the latest stock market rally. Sell. Now, to be fair, you got a 33% chance of being right. It can only go up, sideways, or down. So when they talk about, oh, you're putting your reputation on the line, are you? Really? Anybody could just go, and maybe eventually you'll be right, man. So, I don't put much stake in any of that shit, man. Okay. Now, that was the other day. Yesterday, he said, sell everything, get out of all your stocks, sell every single. I don't know who would listen to this nonsense. And then today, let's see. Big Short hero Michael Burry deletes his Twitter account after posting cryptic market prediction. So, I guess he said, "Fuck it. It didn't work out. I'm deleting it." He's deleted before, though. He's definitely a character. He's definitely, I would not take any advice from the guy as far as financials advice. It's totally crazy. And as I was researching him today, I came across a lot of YouTube channels that were talking about how amazing his predictions are. They totally left out he lost a ton of money in gold. Like, the guy's lost a lot of money in a lot of shit, okay? And he's made a lot of money in a lot of things. And that's what's possible in the stock market, is you can make a lot and lose a lot. I mean, that's just part of the game. What's up, Budget Dog? And that's just part of the game, man. Nobody knows. Don't put a lot of stock in anybody's prediction. Nothing wrong with reading it and trying to think things through. But guys like this, these guys make their living, man. And if they're wrong, it doesn't matter, They only got to get it right once or twice, and then they can make a career on that stuff. And, there's never a situation ever ever, 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 ever in your life where you should be selling all your investments. It's just crazy. It's crazy to me, man. Because what'll happen is then how do you get back in? You know, and I saw a lot of people. I know I reiterate that a lot, but repetition is the mother of skill. And I just want to make sure there's never a situation where you're getting all out of the stock market. Because you got to be right both ways, out and in. And it's crazy, man. So, again, I'm not talking trading there. We got a distinction here. Yeah, there may be plenty of times if you're, quote, trading, you might be in all cash. But in my dividend portfolio, in my index funds and all that stuff, never, 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 never. I want to collect those dividends. I want to compound. And if it goes lower, I want to add, right? So super simple. This is why I try to encourage you, if you're going to trade, that's cool. Put it in a different account. Don't do it in your retirements and your 401ks and all that stuff. Keep that shit separate. You know, our buddy Budget Dog's here, big fan of the S&P. I am too, man. I got well more than six figures just sitting in the SPY. And you know, so all of these, like these type of things are just no-brainers. Like collecting and adding are no-brainers. If you're trading, you got to understand the risk you're taking. And a lot of trading isn't so much about strategy. I mean, I can show you strategy. A lot of it comes down to your emotions. Do you even have the time to do such a thing? And realize that it's a skill that you have to learn. Now, the confusing part to that can be especially if you're newer, the trading and investing comes with a certain sense of maturity. And I don't mean like your age. You could be 25 years old and be a very mature investor because you've been doing it since. I met a kid the other day that's been investing since he was 16. And like he's like 24 and has like, 100 and something thousand in them. His maturity level as far as investments go is way above, say, a 40-year-old who's got no money in the market. And so just because he's got 7 years of stock market experience and he's a kid. So, reps in. I know I saw Chris post yesterday about, being proud for everyone hanging in there. And that was a cool post, man. Because it's tough, man. It's tough, I had a little, I had someone that I'm close to. Someone, what's up, Anthony, showed me some messages and man, it really upset me because they were like saying, talking about my stock picking and that how much money they were. And it's like, they weren't even following along, like they were in. And when, Budget Dog just said he bought some Meta. I think what'd you say, bro? $80, $98? Yeah, I mean, look at that price point right there, man. It's like right on the money, which would have been a stage 1 buy. And then look how far it goes up, and it's like, and I'm sure, whether it be technicals or fundamentals, and I think you need to combine them. My dad used to call chart reading like tarot card reading. I'm like, okay, I get that because I don't believe, well, I shouldn't say that. Trading, yes, you could purely look at technicals. I know I can't say that's true because I know many guys that trade purely on technicals. As an investor, you can't do that. You can't. You got to look at fundamentals. You got to understand the value of the company. You've got to understand the product they make to be an investor. But then if you can add technicals to the understanding of fundamentals, then you have you have the best of both worlds. And then you can confidently, like he did, he buying it, which was a perfect price, by the way, bro. I mean, it's like right in there, right? I don't know if it was this day or this day, but I mean, perfect, right? And we know if you're in the money flow or in the wealth squad, you're going to see like, we're looking for this RSI when prices are cheap, be greedy when other people are fearful. The greatest investor in the world reminds us that all the time. And yeah, this hurts. If you bought that as an investor and then you get this thing, then you might start thinking, to hell with this investing stuff. I'm actually down, gazoogles of money. And it's like, yeah, right now. But if you don't get these moves, if you can't take these moves, you don't get the glory of this. And so if you look in, yeah, best friends, technicals and fundamentals mixed. I agree 100%. It's hard to celebrate this if you can't deal with this. Does that make sense? And so we need this setup. And now imagine this too, because this is something that I've dealt with in the money flow, man, is like, let's say you weren't in the COV crash. You weren't in, some of the more recent things. Let's say you just met me a month ago or something, and you're coming in and you're new to all this and you're like, cool. And you buy right here and that's your first buy. Well, there could be people in the MFG or in the wealth squad. Shit, they're down 40, 50% in this stock. And you just bought it today. Let me give you an example. Me and Chris Johnson were talking, and I was telling him about Zim. I was telling him all my research and had a lot of pushback on this stock. But I started buying it up here, okay? And the dividend is ridiculous, but here's the crazy thing. They were making the money to pay it. It's not like they were borrowing the money, guys. They're making shit tons of money. But yes, if we go into recession, obviously they can't pay that dividend. That's any company, all dividend stocks. You got to understand, they are running a business, and the business is to make money and to pay you out of profits. If there ain't no profits, they are not paying you. And so a good example of this was Ford. We owned Ford at $12. I owned Ford at $7. And at $7, Ford had like a 7% dividend yield. During the COV crash, they cut it. No dividend. The stock collapses from $7 to $4. That's a big fall, man. That's like 40, 50%. And there's no dividend. I let it set up. I start buying. Throughout its 100 years, Ford has cut the dividend, added the dividend, cut the dividend, added the dividend. That's called being responsible. If at your house, if you keep using a credit card when you lose your job, that's called being irresponsible. So they're being smart. Hanes Brand's doing it right now. I had a bunch of people hit me up. What are we doing? And I'm like, I'm invested in Hanes Brands, guys. It's like a marriage, the good and the bad. I can't get rid of my wife just because she makes me mad. You know what I mean? Like, I got to deal with this. So just like Ford, when it cut its dividend, it went down 50%. I let it set up. I go read. I look at the fundamentals and I say, cool, is this going to zero? And it's like, no, they're actually being responsible. They're going to take this money. They're going to pay off debt. And I'm sure if they get the debt and things get back on track, they're going to put the dividend back on. Cool. So I look at, let me see, and I start nibbling on some stage ones. As long as the story's still intact. Now, if they're going out of business, that's a different conversation, right? That's a different conversation. So, you want to give it time to set up. ConocoPhillips cut their dividend in half. Stock cratered, same thing. Then it ended up going up. And if you remember, Ford went from $4 to $25 with no dividend. When they put the dividend on, it fell from 25 to 12. So, that's London. You just bought my book today. Are you serious, sir? Okay. I thought you had been in, bro. I don't feel bad about making fun of you now. But now I won't. You bought the book. I won't make fun of you no more. So these are buy zones. Anyway, back to the story with Chris. And I'm talking with Chris about Zim. And Chris, he just kind of shits money, man. It's like that guy just wakes up making money. And he's buying a bunch right there. Now, remember, I bought it here. I bought it up here. And now he steps in, starts buying it here. Well, in the same stock, he's up 20, 30%. And I'm still down. And it's all the same stock. And so it's all perspective, man, when you get on the bus, right? So keep that in mind. Don't make judgments on a stock based on what you paid for it. I know I repeat that a lot, but I always try to assume some people have never heard me. It doesn't matter what you paid for a stock. What matters is what's the stock going to do in the future. It's all that matters, man. It really does. Adding to Zim, no, sir. We are way past the buy zone. I know Michael from Discord was buying yesterday, and I teased him a little bit, but the last day for me to buy is like right in here. Like once it breaks above the 20, I'm done. Because the money flow pattern for me shows, it doesn't mean it can't keep going. I'm just telling you my pattern. It tells me it's probably going to go right in here. Just the pattern that I follow. What's up, Brittany? It's probably going to go right in here and then stop. And the RSI will go extreme. That's exactly what we're seeing. And that would be a money flow pattern. Doesn't mean we're done going up. Typically means we're either going to go sideways or maybe sell off a little. It makes total sense if you think about it. Because like we were saying, say take a guy like Chris, say he bought 10,000 shares and now he's up. He might want to sell some. And or anybody that was trading it, short-term trading it or swing trading, they might want to sell some. And they're going to look at these technicals and they're going to make that call. Now, as investors, I don't want to sell any. I think it's going up to here at least, So you got to remember, everyone's approaching the market they want something different from the market. So, just keep that in mind. Would I buy some here? Absolutely not. Even if it kept going, I wouldn't do it. It's not my strategy. I'm looking for stuff on sale. Like, let's look at CVS Pharmacy. It's getting back in the box. See, I want to buy stuff after it's come way down and then sets up its support. Does that mean for sure it has to go up? Not at all. This thing could literally just drop and head down. If I'm a trader and I'm actually literally trading it for price appreciation, trying to make money, for me, I'm going to have a stop right around in here because if this is broken, that tells me we're headed back down. So as a trader, I don't want to hold it. As an investor, I would do nothing and I would wait for the next stage one where I would again begin to accumulate. And so same strategy, just different way of implementing it, whether it's buy and hold and whether it's a trade. Don't trade your investments. You can trim them, and we've talked about that. Here's an example of not trimming. Look at AT&T. I didn't want to trim this. Look over here. We had a huge run up. And we talked about this. Our buy signal, stage 1, RSI is extreme. If you were trading it, yeah, you take some off. But when we go look at Morningstar and however you value stocks, it's still undervalued by like 30%. So as an investor, I don't want to trim it. I really don't. I expect it to pull back and set up again. And as an investor, if it's still undervalued, that gives me another buy signal. And then what? You see it run up. And so as an investor, I can use stage 1s as a logical, duplicatable process for adding to positions. Is it always perfect? No. But if I do it consistently over time, that's going to work. Let's see. And as an investor. So think now, but look at this as a trader for just a second. Say you're trading. You're in and out. You would have got out. Cool. It sells off. Well, shit, it's set right back up. So now you're in it again. New trade. You're running up. What now? It's starting to bang the RSI again. So as a trader, you've had 2 good runs. So keep that in mind, man. A lot of students trading options last week. I'm going to guess you were trading options to the short side, probably. YouTube. Hopefully you can hear me just fine. Alexander, have you ever had a problem with ET not dripping dividends from stocks into your Roth? Currently, ET drips in my trading account, but not my Roth. That's odd. I would contact them. Because I have it not in a Roth. I have it in a SEP IRA. I have it in a traditional IRA, and they drip it just fine. So I would check on that. No, I'm not in IIPR. All my buy and hold stocks are on page 18 of the Peters report. Okay, someone mentioned B&O. I've talked about this before. I'm not going to talk about penny stocks anymore. I do have them in my newsletter. This was one we had. It's moving. I'll show them. If you ever go to my newsletter every Sunday night, I would encourage you to do it. Plus, I post it on the podcast. I've been doing that the last few weeks. Everybody that's in the Money Flow gang, I try to get them to. I love it because a lot of people send me theirs. That's always fun. And yours may be slightly different than mine. So as I go through my portfolio and my trading, everything, I have a board in my living room. I mean, you don't need a board. I do it because throughout the week I can look at it easily, but you could do it in a notebook. Not everyone's wife's going to be cool with a board in your living room. Maybe you have it in your trading room or something. He said, trip those badges in a GPS portfolio. So, and again, this is just me. I think if you put hands to it and touch it, you don't have to do. I mean, obviously you can just look at your charts, but I like to write it down because then I can step back and look at it. And I'm like, okay, what does all this mean? And I can look at these different stocks like ET and Dow and VTR and AGNC and like, wow, most of these are dividend payers. And if you remember about a month and a half ago, 2 months ago, I was like, hey, it's time to start buying these growth stocks. And I was more interested in growth stocks necessarily than dividend stocks. Now we keep dripping in the dividends on sale, but we could see the turn. You could see it. Bitcoin led the way. You could see the turn coming. I don't know how much, we're banging some RSIs right now. So, and remember I was saying, let Lyft and SoFi run. To me, they look like straight out runaways. Let's let them run. Look where I said here, build some cash for a hedge. Just thinking ahead. That doesn't mean I think it's going down. It just means I want to raise a little cash. I don't want to be fully invested in my trading as RSIs are hitting 70. They could keep going. That's cool. But I don't want to FOMO. I don't want to chase as I start to take some profits. If there's not amazing signals, I'm going to stack that money up for the possibility of when we do, maybe we need to hedge or whatever, just to have some cash for the pullback that will come. And maybe it doesn't. It's fine. We got some cash. I was trying to keep an eye on trains. That didn't set up. Hasbro, I needed to dig into their earnings. Keep an eye on UTSL. So if you're in the Money Flow gang, we made a move on UTSL today. There it is. This is what I was waiting for. Could have done it yesterday. I did not. The Fed was about to talk. If he would have said 3 words a certain way, this thing was going the other way. So I was a little cautious. And then when it didn't run yesterday, I was even more cautious. So I kind of wanted to see what happened today. We got what I was looking for. Now I'm long utility stocks. This is a triple leverage fund. This is a trade, okay? And so my target on this would be up here. This is too close a target, so I ignore that target. And I'm looking for, which this is a leveraged product, but if you go to the unleveraged, XLU, you see it breaking above the 20 and the 200. I'm looking for it to go to 76. That's that for as far as a trade. Hey, GP, how soon can you buy the same stock after you sell it when you swing trade? Well, if you have the appropriate account, you can buy it 10 seconds later. You might get hit with some wash rules, and that is what it is. But if you have a day trader's account, you can buy it right away. You can move in and out, in and out. If you have a cash account, swing trading account, stocks take 3 days to clear, technically. So if you buy one and then sell it, and you take that money and buy something, and then you sell it, you've just violated the 3-day rule. So keep that in mind. If you don't have the right account, you can't be moving in and out like a day trader. So if you notice, what I'm trying to do is my decisions are made on Sunday. Sunday night for the week ahead, this is what I'm watching. So these were some pennies that I was watching. These were some stuff that I could trim if I needed some money. These were some stage 1 setups. I didn't necessarily buy any of these, but if I wanted to buy, these were the ones. Notice there's Duke, there's Southern. So what's happening? These are setting up. Because there's so many utility stocks hitting my stage 1, you notice over here I said keep an eye on UTSL and the utilities. Keep an eye on it because that means like I'm looking to get into it as a trade. So I'm not trading shit that I didn't decide on Sunday night. So on Friday, I can't just whip out some stock that I didn't think about on Sunday. Keeps me on track, keeps me from chasing. Did I trim Tesla? I trimmed a little the other day. Other than that, we've been letting it run. Wouldn't be a bad idea if you're trading it. Let's see. TSLL. Trimmed a little, and we've been letting it run. I've got a trade on right now, swing trade, not a buy and hold, but a swing trade on Amazon. So we'll see what happens. I was a little nervous yesterday. Facebook going into earnings, 75 RSI, already come up 30, 40%. To me, that was a bad setup. Bam. Explodes higher. Beautiful. Beautiful. Understand. Let's see. Yeah. ENV. I've talked about this. I'm not going to cover penny stocks, guys. I don't think I have a big enough audience to move them, but I don't want anyone to think I'm trying to move them. I don't want anybody to think I'm trying to front run them. I don't think for a second I have a big enough audience to do that, but, I don't want to give anyone the impression that's what I'm trying to do. So I'll put them on my board, but I'm not going to text it out or say I'm buying it or whatever. Money flow rules apply. If I have it there and you see it doing what it's doing and you know the money flow, you know what I'm doing. So yeah, that's about as, I don't want anyone to think I'm trying to front run those. I never would do that. That's not my, And when I don't know if you've read the indictments on those 7 influencers from Twitter that were like, if you read that stuff, it's like, my God, like what they were doing to their it's like, it's horrible. They were literally getting together and they like, let's say you had a huge following. You would tell me, oh, buy this stock, and then I'll come on your podcast and we'll talk about it. And you'll act like, oh, cool. And they were literally doing that back and forth with each other to take advantage of their audience. It's terrible, man. Terrible. Let's see. What's your idea of the euro? I don't trade Forex. Honestly, my opinion of Forex is it's a sucker's game. It's just gambling. I don't think you can. I mean, maybe if you're purely technically trading it, that's your thing. But I don't know. Forex, in my opinion, is too leveraged. It's too easy to blow out. It's just not something that interests me. I've played around in Forex and futures. I think you can have 3x leverage is hard enough. I can't. Trying to do 50x leverage and stuff is crazy. What's up, Manny? Yeah. So I'm not a Forex guy. I don't know. I know 0 people that trade Forex for 10, 15 years, have made a lot of money, have some kind of consistent strategy. I mean, I say zero. When I say I know 0. I know a few YouTubers and shit that claim, but I don't believe them. Let's see. I always ask for their tax return. They never want to give it to me. Let's get, let's see. Anthony said he made 7K on Meta. Congratulations, sir. What's up, Lisa? Congratulations. He said, what do I think of Amazon and Apple? I don't like it right now. Would not touch Amazon. I'm in it. Look at this RSI. So the buy zone, this was your buy day. These were our days. So if you follow what I do with the money flow, you have 2 buy signals, right here and right here. Everything else is past the buy zone for me. So I imagine Amazon hits earnings well. It's going to pop probably up into here maybe. That would be my guess if it pops. Would I play that or buy it now? Hell no. Hell no. Hell nah. No, is it too, well, see, and this is the opposite. Is it too late to jump on CVS? Not at all. It's only hit, again, you got to get the book. Man, imagine if you just bought the book and read it. Imagine if you learned what a stage 1 was and a stage 2. That's all you need to know, man. And once you know that, you know when to take gains. And once you learn to separate, once you learn to kind of get a feel for what a runaway is, you'll know when to maybe hold off on taking gains and let it run. I sold this morning, I should have held. You sold what? Meta? Don't sell your winning stocks, man. I had I had about an 1,800% return in Netflix. I couldn't have done that if I sold stocks. So sometimes if you're not used to winning, it's hard to get your brain around making 500% with shares. I'm not talking about options. I'm about just shares. You know, I've had numerous 1,000% return. And when you're up 800%, it's easy to say, well, man, I should sell this and go buy this crappy stock. And then you watch that stock go up another 200% and the crappy stock you buy goes down. I'm watching natural gas too, man. It just keeps going down though. Yeah, so I'm long. I don't know what Amazon's going to do. I'm long. Yeah, I would never have, unless you're day trading. If you're day trading, you got to get in, get your money, get out. There's no boo-hooing. That's the game. Okay. So if you're going to day trade and do that in one account, like we've been day trading the TQ. Well, there's no setup today. Let me show you what I mean. So yesterday we had a huge day in the TQ. Now I traded on my buddy Josh is in there trading it on a 1 minute chart. I can't do that. I got to work. So, but I can trade on a 15-minute chart. And we got in over here and rode it all the way up into here. And then today it opens on a pop. Well, I can't buy that. That's not my day trading strategy. My strategy is to buy a stage 1. So I'm trading the money flow. So there's no trade for me today. I'm not going to go look for something else. Like this is what I trade short. So this is my pattern. I want to buy the 1, ride it up, take the gains off on the 3, and then let it come in. And then I buy the 1 and I'm trading in the direction of the primary trend. So all of these, like here you go. This is my setup, stage 1, and then I ride it up. Let it sell off, stage 1, and then I ride it up. That's the plan. Well, there is no, look, it opened up. So I got no signal. Now, my buddy Josh, he's on a 1-minute chart. That's too fast for me. He's got a signal right here. He had a stage 1 and then it ran up. So I can't do that. It's too fast for me, man. Too fast for me. I got to work and I get stressed out. I'm doing other things. So I can't just sit and watch that one thing. Bought a lot of Delta during the has been selling but held throughout. Yeah. That's what you want to do, bro. That's the game. Learn those levels though, man. When to trim, when to add. Yeah, I've been watching natural gas too. It's been every entry's been bad until it gets over the 5-day. I would not buy it. This is straight down, man. So no, straight down. Now remember, it can stay oversold for months. Just down, 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 down. It could go all the way to 0. Oil did it. Look at bonds. I mean, it could just keep going down and down. So until this thing sets up in a stage 1 and gets ready to run, and I mean like this kind of shit right here, sideways action, I'm not interested. Don't think because this thing's so low, it has to come back up. It does not. It could spend the next 5 years lingering, never coming back. Like it's a commodity. It's not a stock. There is no CEO. It doesn't produce a product. It's just a product that they dig out of the ground. So in summer's coming, this thing could continue down, man. So keep that in mind. And remember, don't buy and hold this. This is not a stock. It's a commodity. So no, I would not buy it here. If you're watching the money flow, what did I buy? Coffee was one. Coffee banged and hit the RSI. I actually did not trim any. So I'm up about 10% in the coffee trade. So we were trying to catch coffee, caught it. Nat gas, I got stopped out of twice. Now I'm just watching it. Closed out oil trade today, and we're long silver and gold, or silver. So those are the 4 commodities I'm always watching. And look at silver, ran up, came back down. I'm in a half position here. Stage 3. And everything looks to be going down. So yes, CVS is in a stage 1 buy zone for me. Somebody asked if I was trimming Uber. I am not. I do believe Uber will pull back though. Probably a good time to trim some Lyft. Probably a good time to trim some SoFi. Let's look at SoFi. This one has been a monster. It's like, my God. Probably a good day to trim. Probably should have done it right here. We'll see what it does in the open. This has just been a monster. I mean, $4 to. If you remember, if you were on my lives, or it was probably more in Discord, I was like, this stock, if it stays here, it is going to get bought out. If I was JP Morgan, if I was Bank of America, or if I was Wells Fargo, I would have bought the whole damn company right here. And then look what, Wells Fargo would have doubled their money. Wells Fargo, why don't you listen to me? They could have bought the whole damn company right here, took that shit private. Or I wouldn't have took it private, but they could have bought a huge stake and then let it run up. So glad you're back. I'm gonna do this because the market was big, but I don't know. I'm gonna start limiting my public lives. Let's see. Yeah, Zach, I honestly don't care about earnings. I make no changes. But if I was day trading it, that'd be a different conversation, but I'm not. So I really don't care about earnings. It is what it is. You win some, you lose some. I mean, if you close out for earnings, you missed a big move in Meta today. I mean, you're going to win some, you're going to lose some. To me, it works out. And it's like, should we have closed it here because it was on a 70 RSI and up 40%? Or should we have made another $10,000? You get what I'm saying? The market is in an uptrend. So I would expect most earnings are going to go to the uptrend. They're going to move higher. Okay. No, we'll do Sunday service, man. I'm not going to speak on any penny stocks. Is the recent BAH movement an outlier in the money flow system, or am I being impatient? BAH? Is that a stock? What do you mean outlier? I don't know what you mean by outlier. Looks pretty good, man. It's a stage one. You got a nice pattern here. Sideways up, sideways down, sideways. Looks good. I mean, if you're referring to the fact that it's 1, 2, 3, 4, 5, I mean, like 10 or 12 days sideways, yeah. I mean, what the fuck, dude? You buy it and then it takes off. It's like, oh, Rich bought it. I better go now. Like, no, man, it's like, it might go sideways for a while. And what that's given you is a chance to build your position. That's why I like to drip in them. I hope they take a couple weeks, man. Or you mean buy and hold move? Is the recent B and H movement an outlier? Are you talking about buy and hold? I don't know what you mean there. Well, and that's why I was caught I had a lot of younger people that were all in tech and shit. And then they were, once tech crashed, then they were like wanting to get into dividend stocks. And I was like, bro, you missed that. Dividend stocks have already run up. We're looking at tech stocks now. And if you go back and look at, on my, let's take this back. And you want exposure to all these things. Like you want dividend stocks and you want tech stocks and you want to add to them when it's time to add to them. But if you notice on my, why is that so blurry? You know, you're going to see way back in here, look at what I'm doing. Trimming Amgen, trimming Merck, trimming Campbell's, trimming Chevron, ERX, Gilead, ET. These are all dividend stocks. That's back in October. Like I'm trimming them because we had bought them when nobody wanted them. So I'm buying dividend stocks when everybody's talking Dogecoin and this and that, and the market's ripping. That's when I'm buying these. And then when the tech crashes, look what you're seeing, adding to Tesla, Amazon. You get what I'm saying? Like I want it the best I can I want to do what the fuck everyone else is not doing. So if all of your friends are doing something, most of them are stupid and you should go do something else because they're chasing money. Most people that are new coming to the market are chasing money. They want to chase things. They're going to jump in and follow what's hot, and every time a stock pops 20, 30%, I'll get DMs. And I can always tell they're new to the market. So they'll be like, what do you think of Lucid? And I look and Lucid's up 17%. And it's like, I hate that stock. What do you mean? It's up 17%. I'm not in it. Fuck that stock. Like, I'm not chasing a stock that pops 17%. But that takes time. Like, this takes time to get into that process of doing that. Yeah, CVS looks good, man. That's the kind of stock you want to be looking at today, is the ones that aren't going up, man. Do you invest mostly the dogs of the Dow in your IRA? Yes, sir. Or do you hold some growth? Nope. I hold very few growth stocks in my buy and hold. Very few. I have like 4. So of the 87, I think was the last count, dividend stocks or positions in my buy and hold, 4 don't pay a dividend. Lyft, Uber, Meta, Airbnb. Oh, and Dash. I got 5. The rest all pay. Thoughts on I think Haynes Brands is just fine. They're being responsible. The business is having troubles. They need to hold that dividend to cover and pay down debt. I like the idea. I think that's a smart idea. If it was your house, you would do the same thing. So if you're an investor, you should be kind of proud of Haynes Brands for doing the right thing. Does the book show you which dividend stocks to get? Bro, nobody can tell you which dividend stocks to get, but it'll show you a strategy on how to buy the dividend stocks. Okay? It's easy to know what the best dividend stocks. It's not hard. You can fucking Google it. It's when do you buy them and when do you add to them, okay? But yes, if you hang out with us, you'll know because we're buying them all the time. I love Zim. IRA, let's see. Blah, 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 blah. Yep, I love Zim. Let's see. And there's a lot to, and these are whole classes, and it's hard to do this on a live, doing more on whiteboards and shit. Let's check in on the SPY. Is like portfolio management. Oh, dude, the SPY's ripping. Look at this. We had a little pullback going into lunch, and now it's ripping again. My goodness. If you're doing a portfolio of dividend stocks, it's like you want to have some retail, you want to have some banks, you want to have some oil, you want to have some tech, you want to have some industrial. You want a diversified portfolio that pays you money. And you want to buy the ones that aren't doing well. And the ones that are doing well, you let them run. And so you're always focused on the companies not doing the best. That's how I do it. That's how I've always done it. I'm always focused on the ones not doing well if I think they can turn it around. But once they're doing well, I don't even look at them. They're dead to me. So if you remember, we own BX. You rarely hear me talk about BX. But as soon as this big move came down, I'm like, man, I'd be buying BX. Up here, there's nothing to do. You just let it go. So try to build it out, man. The reason a lot of people got hurt in a recent sell-off is you own 30 stocks and they were all tech stocks. What do you think is going to happen when tech goes down? I mean, just think about it. What do you think is going to happen if everything's the same? So, you want to spread your money. If you're going to have a buy and hold portfolio, you got to own different shit in different sectors, man. That's the way you do it. Let's see. Let me see something here. Let's see. Yeah, so if you go through and look, when was I adding to Zim? When am I adding to Zim? What am I adding to Lyft? When am I adding to Kohl's? When they're down. And I'm not looking to add when they're up, right? Let's see. Now, Haynes Brands has not worked, obviously. Adding to, let's see. But this is why you have different things, right? So a tech, coffee, dividend stock. And look, these have run amazing. This has gotten hit, and this is now headed up. So it's through that diversification that you protect yourself, man. Um, let's see. Trying to look at where I don't see it here. Yeah, Pfizer still looks good. That's one of my buy and holds. We've been adding to Pfizer. Crypto looks good. Yeah, Pfizer looks great, dude. Look at this. Perfect stage one right here. So Pfizer, CVS, I mean, those would be two top of my list, man. Yeah, and you got several weeks on this. This is going to take several weeks to build out, man, most likely. So my man here says, I got real estate, but I want to get into stocks now too. I mean, look around your house. You're holding a phone in your hand. You're driving a car. You're eating food. You're drinking beer. All these things are stocks. Pfizer, you know, you're taking the little blue pill, the Viagra. So there you go. You could get some of that. Why are you taking Viagra and you don't own the stock, man? Let's see. D is one we were buying. I know you guys like the D. So there you go. And this one is just, it's so slow. Look at this. Starting to drive me crazy. Thing needs to run, man. So yeah, just start looking around, look at different sectors, and that's how you do it, man. Arc's flying. Oh, you know these guys like it. They like. Let's see. Where's Arc? Oh, look at Arc. Boy, I had to talk a few people out of selling this one too, man. I had to talk them out of selling it over here. It's like, are you crazy? You let it come in, you start buying more, man. Everybody gave up on her. Giving up on old Kathy Woods. I'm talking bad about her. It's like God's given you an opportunity. Yeah, good dividends last night. I collected about $350 in dividends. That's pretty nice. I like that. Fire ND. That's funny, man. I'm not a Peloton fan. I know they hit big yesterday. You know, good for them. I just can't get behind it, man. But it is going up. We'll see. Can't get behind it. That's about it, man. All I'm doing, I'm looking at probably adding some Pfizer here, maybe some CVS. This morning for a swing trade, I sold my oil swing trade and bought UTSL. We'll see if that gets going. As a swing trade, I'm probably going to have a stop right around here. If this breaks down, I don't want to ride it down. You could on this one, and there have been times that I did. I would anticipate it comes all the way back into here, though. I really don't want to ride that down. And this is kind of a hedge play, too. Yeah, Kathy knows what she's doing. You just get a lot of young punks that couldn't take the fall, and then they start talking bad about her. It's all right, man. They're going to look back in a few years and think, man, what an opportunity I had. And instead of talking shit, I should have been a buyer. Hey, dummy, we can't click on that website link. I don't know if you're just brand new to Instagram and don't quite know how it works, but we're going to remove you for being that dumb. Quickly, type it in, guys. www.space. What does that? I mean, let's see. An error. Okay. Let's see. It was awesome because GP was one of the few that always talk. Oh, yeah. She's going back up. I mean, that stock's going back up. Everybody's talking bad about her. I went off on a friend. It's like, first off, you don't even know what the hell you're talking about. You don't understand how an ETF works. She runs an ETF, not a fucking hedge fund. And so there's rules around the way she can trade. A lot of people talk, but they actually don't know what they're talking about because they actually have very little effort, time in it. You know, they'll do that about Bitcoin. They don't have 1,000 hours studying Bitcoin. They just looked at it and then formed an opinion. And it's like, your opinion actually means nothing because you've done absolutely zero study. So go do 1,000 hours and come back and talk to me. If you've ever, you're rarely going to meet a person that spent 1,000 hours on anything. They'll spend more time on looking for a car or vacation than researching a stock. Ordered a Buddy Full book last night. Oh, cool. Appreciate it. What ticker is this? This is UTSL. Let's see. Sometimes, guys, a strategy will run opposite of the stock market. So if you're in an all tech strategy and tech gets destroyed, you're going to not look so bright. If you're in an all dividend portfolio, there was a time, I remember when people made fun of Buffett. Oh, he doesn't understand. He's not like, no, that's not his game, man. And so he just stuck to his thing, and he had like a 5-year run where everybody was saying Buffett's dead and the fund is not going to do well. And it's like, oh, look now. So you could, the money flow could fall out. And I guarantee it, if it went 6 months not doing well, like we'd lose half our group. Oh, by the way, whenever the market's flying, I get a lot of book sales. And whenever the market's crashing, my name is Mud. I mean, it is so connected. It's shocking. It is. Like when tech crashed, it's like my name became Mud. And then it starts ripping and people start showing back up again. And it's like, dude, you've got to stay consistent. You can't be interested in the market just when, like you got to stay on it, man. You got to stay with it. If anything, learn to short, man. Like learn to short, It's like, I'm telling you, it's crazy. If it's ripping, my book sales go up. If it crashes, it's like crickets. I don't know what that is, man. I'm thinking we run tomorrow even further and come back. I don't know. You think a lot. I don't think that much. The rally is proving to be very sustainable short term. Again, I don't even know what that means. I actually have no thoughts on what it's going to do. I just play the hand that's in front of me. I'm going to try one more time. Can you chart EPD? Josh, do you have my book, sir? Enterprises Pharma. Josh. I don't know what we're supposed to look at. Looks like it ran up. Now you're in a stage 3. Let's see. Maybe it's headed back up. Price is above the 5-day. The 5 is still above the 10. 10's above the 20. Yeah, you're in an uptrend, sir. Your buy signal was right here. Right there and right there. I would not buy it any other place. Your target's right here. You're hitting resistance and the RSI. So if it was me, I'd be trimming some if I was trading it. Looks good though. Maybe it keeps going. If you got in down here, congratulations. And you see that's the pattern, right? Notice this? Man, this is a good looking. Look at this thing. This looks nice. Sideways, up, sideways, down, sideways. And it's not a lot of up, but a little bit down, sideways, up. And now we're going sideways. Beautiful. Trying to figure out a trim point. God damn. Page 127 of the Money Flow, chapter 8 says, locking in profits, putting money in your pocket, Josh. Let's see. A predetermined point at which an investor will exit a trade in a profitable position. Profit targets are part of many trading strategies that technical traders use to manage risk. Before an investor enters a trade, and I'm using that term, he determines a profit exit point at which he will sell out of the position. So let's see. I was going to say the F-bomb, shouldn't even have bought it if you didn't know this answer. But if you're trading it, that tells me you're looking for an exit. Why would you buy it if you didn't have an exit? Don't buy shit. You don't know where you're selling it if the goal is to sell it. This would be like saying, I want to flip houses, Gerald. And you go fix up a house and then you go, how much you think I can get for it? And you're like, what? How much you think I can get for it? You didn't know that before you bought it? You'd be out of business pretty quick as a house flipper. So, Josh, get your shit together today. Today. Like, don't let another day go by that you don't know this. So if I was trading, when the RSI hit 70, I would trim some. And when it hit a previous high, which is this right here, So I go print this off, put it in your pocket, carry it to work. It's from thepetersreport.com. And stage 3, distribution, is where you're looking to trim, okay? If you're trading or if you've made some great gains and you're wanting to lock some in. That's where you want to do it, because then it's going to roll over. Now watch this one here. Let me show you this. Look at Wells Fargo. I was looking at this chart yesterday. And look at these money flow patterns. Imagine this, Josh. You've lived your whole damn life with all your dumb friends that don't know anything, babbling about baseball and other dumb shit. And then you come along and you meet me. And years ago, I had this dream, and I sat and I was like, wow, this is how stocks move. I was playing blackjack, and the voice of God came into my head while I was drinking. That's the weird thing. God talks to drinking people. And as I'm sitting there in a casino playing blackjack, I heard a voice in my head say, Gerald, you're looking at the 4 stages wrong. I've been reading about Stan Weinstein. Stan Weinstein was doing it on a weekly chart. And the voice, as clear as day, said to me, look at it on a daily. Now, I'm sure other people were doing this, okay? I'm just telling you the experience I had. And it came as clear as could be. I saw that prices moved, not always perfect, but they moved like this. And here's what else I figured out. They tend to stop where they stopped before. And I was like, wow. Now, sometimes they keep going, and sometimes they don't quite get there. And that's called the risk. But yet it allowed me to set parameters for myself or develop some sort of rules. And that allowed me to have targets and exits if it moved against me, what some people call stop losses. And sometimes you don't need a stop loss because you don't want to sell it. But if you're trading, and here's what I figured out too, as I began to study that movement, it didn't matter what stock it was, that if I could break it down, it's like, man, what if we looked on a 1-hour chart? And I began to look at that, and then like, it's fractal, right? If we look at a 15-minute chart. Now in these uptrends, it's just straight up, but here's one. Look at Meta. And now look at it on a weekly chart. On a weekly chart, and this is why I was so bullish when all my friends were bearish. Because on the weekly charts, we were having breakouts, man. We were having breakouts. We had an anchor point, we had a stage 1, and then we had breakouts. So I was pretty sure stocks are going higher. No matter what everyone is saying, stocks are going higher. Because everyone is stupid, by the way. Even the smart people are dumb. Like, they don't know. So I knew the money flow knows. I know that. So I know when price goes above this green line, it keeps going, usually until the RSI gets extreme, and then it goes sideways. And when it goes below the green line, it goes down until the RSI gets extreme, where then it goes sideways. That pattern, I know, works. I know that 100%. I'm 100% convinced of that. Is it work 90, 100% of the time? No. So the way I protect myself is by being in more than one thing. Remember 1 year ago, you said you did not use stop losses. Was I wrong on how do you use them now? Well, again, this is the confusing part, because it depends. If we're talking trading, if I'm fucking day trading, I have stop losses. If I'm buying and holding or trading around Meta, I don't need stop losses. So it depends. What is it you're doing? What is your time frame? So it just depends. If I'm position trading where I'm just accumulating on stage 1s, I don't need a stop loss. So I'm not going to stop loss buy and hold. I'm not going to stop loss position trades, But if I'm short-term trading, yeah, I would stop loss. I'd also might short it. Also might buy call options. I mean, there's a lot of things you can do that I talk about. There is no one way, and it depends, because a lot of times people are just not at a maturity level to understand all of this stuff at one time. You said that a chart lives will go paid subscribergy. Is there access those in the MFG? Or do those MFG not really be part of the lives? I sent a text message yesterday to everybody in the MFG with the link. In our class yesterday, there was a link. Pretty sure everybody should have got it. And if you click the link, it'll took you to the YouTube. Should have been posted in Discord as well. If you didn't get it, let me know. Or if you didn't click it and go there, like click it and go there. But yeah, when I said private, I meant for the MFG. How do I get those text messages? Read. You got to own book, man. Go to the back of the newsletter, page 28 talks about it. Yeah, we'll do some more of those. I'm gonna do a couple of those a week, the private ones where we don't do any teaching. We just look at the charts, look for targets, and go down the list of all the stocks we're in. Okay. And there's a bunch. I'm in like 100 and something stocks. So says, yeah, I understand RSI's stream was thinking it might dip back down to the 90s. Stop thinking. Stop fucking thinking. You don't know what it's gonna do. You have no fucking idea. Stop thinking. Don't think, man. People start thinking. They're like, oh, well, it's up high. It's got to come down. That is the dumbest thing. I'll see people like, oh, I'm going to buy a put here. You're going to buy a put against the trend. Makes no sense. You buy puts when it goes into a downtrend, not when it's in an uptrend. So the money flow trades with the trend. I never counter trade it. I'm not looking to short it. I'm not looking. Sometimes people will start wanting to hedge it just because the RSI is extreme. Why? For what? Catch $1? Like, I mean, it doesn't make any sense. The trends to the upside. Now, this will eventually come back down, fill this gap, most likely. They usually do. They fill the gaps. This gap here got filled. How much money are you going to make today? I have no idea. Let's see. I'm not part of the MFG. Well, you're not saving money by not being part of the MFG. Jeez. I mean, just in the last few weeks, you should be up thousands and thousands and thousands. Yeah. If you're trying to roll with me, you're not saving any money by doing that. You're losing money. And you're like, what do you mean? I don't know. Here's one of our ticks. Look at that. But I want to save my money. Well, we got long at 20. Now it's 46. Looks like that covers your admission. What's another one? Tesla. I don't know. We're up like 80, 90, 100%, I guess now. I don't know. You're not saving any money by following me but not being with me. Because the good shit I'm not even doing on here, guys. Let's see. Yeah. The good shit is secret. Let's see. In the penny stocks, now I just got to tell my personal friends because I can't put them out publicly. So my personal friends I send to them. Let's see. Yeah, but I get it. If you're on Instagram subscription, I appreciate that. And I do go live on there just for them. So that's cool. You should get your money's worth. If you didn't, something's wrong with you. Let's see. You own a lot of stock in India. Congratulations. Up at least, Alexander Broder says, up at least 6K in the past 2 weeks because MFG. Cool. Now, obviously, the market's working in our favor, but that's part of the game is knowing when that's turning, right? That's part of the game. The market gives us the money, not us, right? The only thing we can do is maybe try to outpick it, like, get a stock that we think will go better than the market. That's the game in stock picking. But the market itself will determine. Does that make sense? So if the market can work against us, there's nothing we can do. Like you could buy a breakout, and if it turns right around the next day, it is what it is. It's not the money flow. It's just the market changed its mind. Let's see. You buying more Hanes now. Let's talk about Hanes brands, and then I'll wrap it up. No, do not buy Hanes right now. Ooh, down 25%. Brutal. Yeah, we got to wait for a bottom. It's going to come right back to where it was, I'm guessing. Brutal. You should have a couple thousand shares like I do. Ugh. You don't like Haynes? I mean, what they're doing is smart though, man. Yeah, I'm keeping it. I'm gonna be adding to it. It's smart. They needed to cut the dividend. They need to pay off debt. It worked out great in Ford. This guy says, "Fuck MFG. We ate y'all up." And I don't even know what you're talking about, bro. Yeah, they cut the dividend. No worries. I know. I'm trying to see who this dude is. Yeah, no worries. I'm not selling Haynes brands. I'll wait for it to set up. They're being smart. I need to go read earnings. Looks like they stopped the dividend so they could pay off debt. That's smart. We all do that. You know, kept Ford when it did it, kept Delta when it did it, kept Conoco when it did it, and all those worked out just fine. Matter of fact, I'll show you an example. When Ford did it, they did it because they had to. It was during the COVID days. And if you look, when they cut their dividend was over here and the stock literally collapsed. And it went from whatever it was, $8, $9. I think I said $7, but it was like, I think at $7 is when they cut it. It literally collapsed to $4. And then with no dividend, goes from $4 to $25. Then they add the dividend on and it falls back to $12. And now it's crazy, man. Conoco, Phillips, same thing. When oil got crushed, they cut their dividend and then the stock went up 130%. So, that's just part of the game. You're going to get some wrong. I get stocks wrong. That's why I don't pick just one stock, man. Uber's one of my favorite. I could absolutely be wrong on Uber. That's why I own some Lyft. Yeah, so cutting a dividend is not a reason to bail on a stock. It will temporarily hurt it. One reason is dividend funds have to sell it. If you're in any kind of fund that pays you dividend, they got to sell it, So it's all good, man. It's all good. Hey, Zach, what's up, bro? Oh, I dropped my pen. Oh, there's always one. Let's see. Where's this? Yeah, so I'd just give it a minute on this. Let's see what's up. Make sure it's not a complete disaster. I'm gonna go read. I mean, the earnings came in okay. This is a little bit of overreaction, and I'm sure it's because of the dividend. We'll see. Let's see. Yep. Where are we at? Anyway, that was the thing on Ford. Ford's ripping right now. What a beautiful play. What a beautiful money flow pattern here. Look at this. Look at these patterns on Ford, man. Stage 1, stage 3. Remember, this is the video where I did a short class on shorting. Look at that run we had down. Talked about covering the short, getting long, and now what? We're coming up. This pattern has just been beautiful. Look at this thing. I don't know why I haven't put on some swing trades on this because the pattern's been so good, man. Yeah, let it settle. We'll give it time. We'll figure it out, and let's go read on it and see what they have to say. And if it is a disaster and it doesn't look like they can get out of it, then we'll have to figure something out. Oh, let's see. Damn, let's get straight to the facts, sir. How much money do you have in the bank? Be honest, I have very little money in the bank because I'm always investing my money. I don't keep a lot of money in the bank, to be honest. As soon as I get money, I put it in the stock market. Now, I got a lot of money in the stock market and a lot of money in the real estate market. I'm not a big fan of cash, man. Cash is for one thing for me: pay bills, buy stocks, and put into real estate. Outside of that, I really don't have much money usually. Shit, some days I'm broke, man, because I invest all my money. I'm constantly investing all my money. Um, you know, outside of having a little bit of money, I like to invest it, man. Let's see. What you should ask them, don't ask them how much money they got. Ask them how much dividends they getting, how much rent they collection, how much their business making. You know, Mike Tyson had a lot of money. Didn't do much for him, lost it all. So it's really about how much you're keeping too. Although I wish I had some more cash right now so I could buy another Airbnb. That I wish I had. I wish I did. I need some more cash. Said, should we trim Ford? Again, it's a buy and hold. If it's undervalued, I wouldn't be trimming it. You could, and then push it to, you could, but I mean, I wouldn't unless I thought I had something else to put it in. The reality is, though, it's probably going to stop going. Again, I don't know. I'm just looking at the pattern. I don't like to anticipate. So a lot of times once I show people like how to see a stage 3, they tend to anticipate a stage 3 and get a little aggressive cutting, and then it keeps going. So I tend to lean to the side of like, let's let it prove out, like let it go sideways for a while before I think it's a stage 3. No, I don't think I would. I mean, nothing wrong if you did. You're hitting the RSI and you're at a previous high. Those are the money flow rules. Stage 1, 2, you're hitting a previous high. Likely it'll come down. So if you needed money, that would be one that I would trim. What's up, Joe? That would be one that I would trim. Yeah, I don't know what Jamar is talking about. Apparently, he's got some kind of trading group because he said they crushed the MFG. I don't know how he knows that since he's not actually in the MFG. Shit, I don't know. He may be. Had to kick out 2 people who were the other day for whatever reason. Were making fun of me, and the other person showed me the messages. It's like, Jesus, dude. Why? I don't know. I've literally never sent messages making fun of MFG members. Like, I don't know why someone would do that to me. I don't know. Let's see. All right, man, let me get rid of this guy. Tried to give him a minute. We got rid of him. We blocked him. Let's see. All right, man. You guys be good. I appreciate you. We're doing great things. Things are moving great. Manage your account. Money flow rules apply. Even if I'm not trimming and you need to trim, like, if it makes sense, if it hitting, if it's doing what you need it to do it. It just depends on the context, really, So think it through, man. That's where you're playing the chess game. That's why putting it on a whiteboard or on paper sometimes can help you see it versus flipping through charts or just looking at numbers on your account. Putting it on a piece of paper can kind of help you see it and spread it out and then start kind of thinking it through. Wow, how much retail do I have? Do I have too much oil? What about tech? And it's like, just start looking at it and see like, do I have any holes? Am I too weighted in one thing? And if you're too weighted, this is a great time to downsize some of that weighting, right? Makes sense, right? So, man, we got to get rid of all of them, huh? There we go. I pulled that person out too. So I think those were bots, man. I think those were bots, guys. Yep. That's it, man. You guys be good on Instagram. Wow. A lot of badge buyers there. Major Mills, you bet, man. Yeah, I'm gonna be patient. I mean, a 25% drop sucks. There's no way around it. Luckily, everything else is doing well. That makes it a little easier to absorb. We've had a lot of winners, so having one loser, I mean, it is what it is. I'm happy that we just have one that's catered compared to wasn't that long ago where it's like everything under the sun was collapsing. So if I just have one, it is what it is. If we end up, I don't see that happening, but let's say we had to cut it, it is what it is, man. It'll give you money to buy other things. As long as we don't have a bunch of those, then everything should be okay, man. Never makes me happy. See, I'm waiting to kind of read. Morningstar owns it in their real dividend portfolio. That guy over there is pretty smart. I'm kind of waiting to see what his opinion is. He's an analyst. I want him to add, he can understand the balance sheet and all that way better than I can. So I want to see what he has to say before and what a few other people say that are analysts. I want to read what they think on the books, because me looking at books, it's just numbers. It's hard to make sense of it. All right, man. You guys be good.
Classic case of anticipating events out into the future, said Larry Watchtool, a market strategist at Prudential Securities. Well, those guys certainly got their pants pulled down, but it is pretty interesting comparing that sentiment to today, because a lot of the news articles I'm reading at the moment are hinting that the worst is over and we're just back to a bull market. So clearly Michael Burry doesn't think so. And interestingly, his latest 13F filing backs up his words. And for those wondering what the heck is a 13F filing, it's simply a filing made by big name